Hey, what's going on, everybody? Hope everybody is doing well. I know it's only one person on Tony. Hey, hi, Tony, how's it going? Um, Sorry for the delay. I wanted to be on here an hour ago, but again, this is the beauty of YouTube, right? Like, I don't have to, um, people don't have to watch this live. They can watch this on the replay. So we'll give it a couple minutes before we start. Um, Hope everybody's doing well. Today is going to be really focused on like just entries, and really being able to kind of like take some of the things that we talked about and really just put them into an actual trade setup. We've talked about a lot of different things, and I'm gonna go back and watch all these videos when they're done to kind of see what holes are there and see what else I can add. Um, but really just gonna give you obviously an overarching strategy for trading forex or currency markets. But it's not going to be everything. It's going to require a lot of chart time, right? You seeing things in retrospect, and seeing things live, then seeing things, um I'm sorry, yeah, seeing things in the retrospect, seeing things live, and then actually being able to kind of project it, watch it live, then eventually working your way into a demo situation, and whenever you choose to go live, that's on you. I can't make the decision for you. But um that is basically, kind of like, it's going to take a lot. It doesn't take, it's more than just watching these videos once or twice before you get it, right? And so it's being able to see these things obviously in real time, which is the goal, right? You want to be able to trade these concepts and not just watch them play out, or mark up charts afterwards. So that's kind of like the overarching goal, obviously, as a trader, being able to execute on these things. But it takes a long time, and I want to make sure that I'm basically telling people like the truth when it comes to this. Like, it's not an easy game. It's not just watch 3 videos and make money, right? It's never been like that. And for the people that say it is, or if you heard somebody that kind of treats it like that, they're probably not profitable, right? And so by now, it doesn't matter where you're following me at. If you're following me on YouTube, or if you're following me on, Telegram or social media, you can see that, this is something that I do on a regular basis, right? Being able to extract money from the market. And I'm not saying, again, this is all of this class is stuff is for education purposes only. It's not trading advice or trading signals, investment advice. It's really just, again, my personal strategy and the personal way that I look at the market. Um, but yeah, it takes time to be able to do all these things. And what you're seeing is somebody that has 10 years of experience here, and a lot of error, right? A lot of trials and error, and really on the error side, right? Like, I can tell you about accounts I've blown. I always talk about the my first week of trading, where I had a $300 account turn into $1,000 in the first week. Um, and then lost it right that by that Friday. And that was, the first of many accounts that I had blown in a few year period. So it's one of those things where you have to take your lumps. You have to know what you're looking at. You actually have to have a strategy that works, or being able to see the market, right? And I think a less of this stuff is less of a strategy and um more of just how I'm like looking at the market flow and looking at the markets, right? So it's like, you can take all these concepts, and there's a lot more. I'm really just going to dig the surface, or just digging the surface of what we can get into as far as concepts, and being able to look at entries and exits, and being able to read the market. But it's really just being able to take, you know, looking at the market at a at a very nuanced level, and then being able to kind of find entries and exits in those in that. But I don't even call it a strategy, because strategy kind of implies that it's a technique, or it's like, just one way of doing things. And I really truly think this is how the market moves, right? And if you understand that, obviously you can build a strategy out. And so hopefully over the past few weeks, you guys have seen, um, basically how the forex markets move, how the currency markets move, and how you can start to see, even predict the direction, right? So obviously the first class was the introduction to Forex. The second class was going to be is has been more of like, understanding the sessions and how the market's moving. The third lesson was really understanding where the market's moving to in terms of liquidity. The fourth lesson is, why the market's moving. Again, introducing these concepts, the algorithm, the liquidity as well. And, now we're basically trying to understand, how do we ride these trends? How do we get in today for entries and exits, right? So, again, it's going to be more than just these 4 videos. It's going to require a lot of chart time to be able to see these things. And it's not going to be a long class today. It's going to be a very short class, but hopefully this can kind of help you guys understand some things. And so when we talk about, I'll use this example. I was working with a student earlier today, and I'll use this as an example. But we start to talk about entries and exits. There's a set amount of things that we're looking for every time we trade that we want to see the market do. And so we'll kind of outline some of these things, right? And based on the ideas that we presented, over the past few weeks. So what I want to do, and this is going to be purely chart work today, or purely looking at charts. So, and this is an example that I'm going to start with, and I might run through a couple more. So the first thing here that we want to see, is this is our standard kind of like daily session, right? If we look at this was Sunday, November 3rd. So I think this was last Sunday, and going into obviously the entirety of this day. So if we kind of zoom out a little bit, we can see obviously this is our Asian session, right? So Asian session going into London. Our London window again is going to be that 2 to 5 a.m. where we're going to really look for entries during London. We have our gap between London and New York session, which is kind of like a dead period. And I consider this from like 5 to 7 a.m. is where we're not really looking to enter. Technically, this is all still part of London session, but it's really kind of a dead period for us because we're not going to be looking to enter during that time. And then our New York session, really, our entries are going to be from 7 a.m. to really 10 a.m. Depending on the day. Most of the time it's going to be 10 a.m. Every once in a while it gets stretched out to 11 a.m. if there's a big news release, right, that happens somewhere around 10. But ideally, this is where we're kind of trading after the sessions or for the days. And so really, what we want to go back to note is, again, some of the things that we've talked about over the past few weeks, right? So again, set the power of 3. And then in this case, if we're looking, I'm trying to zoom in on this to make this a little bit bigger. There we go. So if we see power of 3 here, we can see very clearly, right, our consolidation. Consolidation, right? Our manipulation, right, going up. You can see the arrows already drawn, and then our distribution going down, right, for the day. So basically for the day, our distribution was a bearish day. It was a bearish trend. Our manipulation, again, will take place in the beginning of London and New York session. And then the bearishness, obviously, that happened throughout the second half of London and throughout the rest of the day, right? And obviously the day ends somewhere around here, right? So this was pretty much all of that particular day. Now, the question that you guys are probably answering, and we'll get to that in a second, is, okay, cool. You showed us what to expect through the day, right? Consolidation, manipulation, distribution. So we've been looking through that lens. We understand that the majority of the manipulation, like this leg up, right, will be happening during, London session, or, half of London session, or towards somewhere in London session, we'll start to make that reversal for the day. And then New York is usually a continuation, right? So we understand those things. We've been looking at that for a few weeks. We also understand the idea of liquidity, right? And that's the thing that we've talked about over the past week or so, where the market is always running for liquidity. So we know under this Asian high, it's going to be buy side liquidity, right? And we know that when this market runs up, it's going to usually take out some level of buy side, whether that be the Asian high or an old previous high. In this case, it's the Asian high. We know there's money sitting above here. And we know the market runs to and from money, right? Right. It's going to take out old liquidity levels, right? If we're going to go down for the day, it's going to grab some type of buy orders or buy liquidity to match with the sellers below old lows, right? In this case, these lows right here. And I'm going to clean up this chart just a little bit so you can see this a little bit better. But old lows like this, these lows, on the way to low of Asia, right? Or old imbalances, right? How price trades back into this fair value gap here, right? At the end of the day. So we know the market is either going to go up to grab buy side liquidity, right? Or fill old imbalances or gaps, or go low to take out, old lows where there's sell side liquidity, or old imbalances like this one right down here where the market really consolidated for the day. So we know that, right? We know how the market moves with power of three. We know where it's going to move to and from liquidity. We also know that and how it's going to get there, right? So the question that everybody is probably asking themselves right now is how do we take trades on that? Like how do we actually get into this? Right. And so this is going to be kind of like the meat and potatoes. When everybody thinks about trading, they're always thinking about entries and exits, right? But hopefully you guys have realized by now that it's a lot bigger process than just looking for a particular entry and exit. And if you can understand, to be completely honest with you, you can understand how the market flows, how the market's supposed to move. There's so many entries, even within this day right here. You can see that there's so many entries and exits on a particular trade. And so I'm only going to really talk about one, but just know that, as a trader, there's a bunch of different entries and exits you can take on these things. But the main thing here we're going to talk about today is how do we actually enter into these trades. And so I have like a 3 or 4 step process when it's going to comes to looking for entries into the market that I'm going to share with you guys today. That is the easiest one to understand. Again, I have I'd say about 5 or 6 different ways that I can use to enter into a position, but this is really going to be the simplest way, and really, I would say the one way that I know that the market's going to really start to reverse. So let me see. The first thing, I'm going to make a note. I'm going to make a note here. I'm just going to leave it here. Oh, wait a minute. Give me 1 second. Text note, anchor text, price note. Yeah, let me do this instead. Okay. So the first thing we want to see is we want to see during our London session, hold on 1 second. My bad, guys. I had some background noise. So, okay. So when we talk about actually taking a position, right? So we're looking at a couple of different things, and I'm going to get rid of these lines, right? Again, we know where these sessions kind of start and begin, but just to kind of clear up this chart a little bit. So when taking a position in the trades, the first thing that I want to see is a run on old liquidity, right? That is the first criteria that I want to see happen, right? So usually our manipulation leg, right? This leg up here we'll run into, again, an old high. If we're bearish for the day, it'll run into an old high or an old imbalance. There could be a level like this where there's old liquidity. It could be an old civvy up here, right? Like an old, an old BISI here that the market might trade into. Sometimes you'll see that. But the first thing that we want to see is, our number one criteria is we want to see a run on liquidity. And this will usually happen. Usually the time frames that I'm looking for is a run on liquidity on the 15-minute chart or below. But actually, I'm sorry, the run on liquidity in the 15-minute time frame. The second thing is, once we see a run on liquidity, the second thing we're going to want to do is shift down to a smaller time frame, because we're not going to enter on the 15-minute. We're most likely going to enter on a smaller time frame, whether that be the 5-minute or the 3-minute time frame. So if we hop down to the 5-minute time frame, I'm going to back this up so we can see. So hopping down to a 15-minute time frame, once we see the run on liquidity, what we want to do is hop down to the 5-minute time frame, right? The second thing we want to see once we have a run on liquidity, again, taking out an old high, really grabbing some old money like that, is we want to see a break in market structure. And this goes back to that first or second week when we talked about market structure, uptrends and downtrends. And we'll talk a little bit about, obviously we'll show you the quote unquote pattern, right? But we'll talk a little bit about the thought process and what the market is doing when this happens, right? So when we go down to the smaller time frame and we see a run on liquidity, right, that's already happened, and we see a break in market structure. So this will be our break in market structure here. We have a higher high, we have a higher low, we have a higher high. At this point, when we take this low out right here, we have a lower low, right? At this point, we have broken market structure, right? We are now creating lower lows in the market. Now, what's going on here from like a market maker perspective? And so we can stop thinking about patterns and start thinking about like order flow and what the market's doing. What's going on here from like a mechanical standpoint, right? Well, we grabbed the money that we needed to grab, right? The money, let's say this dollar sign could represent billions or trillions or whatever the amount of money is, a lot of money that the market needed to go up and get. So now the market makers, the algorithm, right, the thing that moves price up and down, is saying, okay, cool, we have the money that we need for the day. It is time for us to start going the other way and distribute these buy orders to our sellers. And again, we talked about our sellers being under these old lows in old imbalances, right? Just is what we were talking about a second ago. So what has to happen here, right? Well, the market has to break structure. Whenever you see a break in market structure, what is the algorithm saying we are no longer trying to hunt the liquidity that we are heading for. We are now trying to hunt or match that liquidity with the opposite, right? And so all manipulation is again getting traders to think that the price is going to go long, right? Attacking, like the whole time traders are buying into this, but it's really running to a particular level where there's money sitting in. So the market can grab these orders and match them up with the other side. Remember, the market only exists to match buyers and sellers. That's it. This is a big game between buyers and sellers. That's all it is, right? And so when we talk about um, what the market's actually doing, it's that people tend to get, you see a lot of different sentiment online. A lot of different people will have a lot of different perspectives on the market, right? Some people will say the market is uh, it's just buying and selling pressure. Some people will say that it's obviously how I believe in algorithm. You'll see some people get really religious when it comes to the market and it's like it's just God moving, and a lot of this is just, you have to understand where the money is at. These same big hedge funds and institutions come in day after day, week after week, year after year, and just grab money and grab money and grab money, right? And so once you understand how these markets are moving, then you can understand what the mechanical thought process behind this that's based in logic, because all money moves in logic, right? But once you understand that, you'll be good. So the second thing we want to see here is a run on liquidity, right? The first thing is a run on liquidity on that 15-minute chart. Then we want to hop down to either the 5 or the 3-minute chart, and we want to see a break in market structure. Again, because we want to enter mostly the time on our 5 or 3-minute time frames. That's going to be the time frame that we're going to really see the market where they want to run to. And so the second thing that we want to see once we get that break in market structure is the formation of a fair value gap, right? So that's going to be the first thing that we're going to talk about here, is the formation of a fair value gap. And really, in this case, there was one big one right here. When we see the formation of that fair value gap, and I'm going to speed this back just a little bit so we can kind of see what happens here. When we have the formation of a fair value gap, the next thing we want to see is price re-enter that. Once we have price re-enter that fair value gap, then that really signifies our entry into the trade. Right? So when price re-enters this gap, when price re-enters this gap, that really signifies our entry into the trade. That lets us know we did what we had to do. We grabbed the money. We broke structures, and breaking structure signifies that we are no longer interested in hunting buy-side liquidity at this moment in time. We want to go hunt for sell-side liquidity. Once we start hunting for sell-side liquidity, then you're going to want to see a fair value gap open up. And once that fair value gap opens up, then you're going to want to see price re-enter that gap. And that really serves as our entry. Stop losses will go above old highs. So in this case, I will put my stop loss above this high. For a beginner trader, I'm saying that for a beginner trader, I want to see everybody really aim for the low of Asia, right? So the Asian low is going to be the target for all trades, right? So we have entries and we always have exits. You never want to enter the market without an entry target, a stop loss target, and a take profit target, right? And so if you do not have a lot of success going in the market and being able to win trades, then the first thing you really need to do is be able to build up confidence, right? So there's a lot of times where I will hold trades and I get huge runs out of these trades, whether it's NASDAQ, whether it's Euro USD, whether it's, the currency markets in general or the indices, whatever. Like I can hold these things for big runs because I have the confidence built up through repetition, seeing these things play out over and over and over and over again. And that's why the homework is so important. Being able to go and do that homework on a daily basis is going to only build the confidence that what you're seeing is actually going to play out over and over again. So again, when we see the market break, we see the formation of a fair value gap. We want to see price re-enter that. And what that signifies is us grabbing that last little bit of buy-side liquidity before the market starts to run the other way. So we have a lot of confirmations that the market is grabbing and switching views. And so now what do we start to target on the downside? Again, since the market structure has shifted from a bullish trend to a bearish trend, we know that bear trends are going to target sell-side liquidity. So what are, again, our targets? We want to see the market hit old lows like this particular low, which you can't really see because it's covered up and the candle's white. So all of these represent areas of what? Sell-side liquidity. that the market could potentially run to. Right. So that's going to really represent these three areas where the market's going to potentially run to. Now, again, these can serve as take profit levels. So let's say we were to enter into a trade here, just for like reference. So we can kind of show you this. Stop loss goes well above these highs. Drag that up there. Ultimate take profit, again, will be the low of Asia. Whatever our low of Asia is what I want to see the market really run back to. We can hop back to the 15-minute time frame. And in this case, this trade would, this is a 1 to 2 about. I would risk about $700 to make about $1,300. So this is just a good, just a good sample of what we want to do. So the first level, again, will be this low here. And I'll be watching this to see how we run to this level and what the market kind of gives us along the way. Right? So the whole time this is happening, I'm watching these markets to kind of get a better understanding of what's going on and how do we manage these trades while we're here. And what kind of forms along the way. So I'm actually going to pause this and go down a little bit more to the 3-minute time frame. So you guys can kind of see this happen in a little bit slower motion. Because I don't have a lot of time today. I only will be doing like one example, or probably 2 examples, maybe tops. So again, our first target is this low right here. We know what's under this low is sell side liquidity. I'm actually going to slow this down a lot more. So what happens here? Market forms a fair value gap, right? It forms another one right there. I'm going to slow this all the way down so you guys can see this. So again, the market formed a fair value gap right there. It took out that first level. So now once the market hits this level, we have to kind of take a step back and see if this is where we think the market is going to continue to run to. It forms another fair value gap here on top of that. So it's letting us know that the market is giving us this, momentum in the right direction. We're continuously forming bearish fair value gaps that the market is responding to, and it keeps going down. So even after it takes this initial sell side level, we know that it's probably a good probability that it's going to keep running for these levels, right? And again, under every low we see sitting here, there's going to be money, right? So just like there was money above those old highs in the form of buy side liquidity, there's going to be there's going to be money under these lows. I'm going to make the money red because I like color coordinated stuff. So again, these are going to be where the seller is going to be at, right? Under each of these lows, right? So we know the market's going to run for these levels. We can see the market is running here. So this will be our next initial target. It's, especially after we're closing under this low, we're forming new fair value gaps to support this idea that the market's going to hit our eventual initial target, which is down here. And this is basically how you manage a trend. So what happens next? Wow, this is going slow. We trade back up into this order block here. It doesn't overtake the order block. If we zoom in, we can see it does not trade past that order block, which is another good sign. The market continues to run for old lows. It takes out the sell side liquidity here under this prominent low and this sell side liquidity level there, right? Stops just below breaking it. That's usually a great sign that it's going to continue to run through there. Now the market hits this level. It's a very prominent low. We have to ask ourselves, is the market going to continue to go down? Well, there's not really giving us any reasons as to why the market should reverse. It's forming new order blocks on the way down. It's continuing to form new bearish fair value gaps in the form of SIBIs the market should run into. Oops, it's a little off. So there's really no reason to be scared of the trade at this point, right? Trades back up into that, respects that level. What happens next? respects the levels that need to be respected, continues to reject, heading back down for these lows. And I'm going to speed this up just a little bit. On the way to that 15-minute low that we saw earlier. Trades back into that fair value gap there. Let me see here. Boom. And ultimately hits our final take profit, which is right here, right? So this is basically an example of what a winning trade would look like to me, right? And what a winning entry and exit would look like, at least for the beginning of the day. At least for the beginning traders here. Like, again, I would like to see us really tackle the buy, taking a trade above the high of the Asian session and really running that to the low of the Asian session, or something that's very prominent, like a fair value gap towards the bottom of the Asian session. And so this is essentially, you know, a trade that I would take in the New York session or in the London session, for basically a winning setup. And the majority of my trades, when I trade currencies at least, look something like this, right? They're trying to find, if I'm bearish, they're trying to find the high of the day or the high of the session, right? In this case, this was the high of New York session, which is fresh off the high of the day, right? So it's trying to take the high of the day to the current low of the day at that time, right? Which in this case would have been that Asian low right there. So that's basically what my trading style or this particular strategy looks like. And I think this is a very easy concept to understand, right? Once you're trying to buy over the highs of Asia and you're trying to take it to the low of Asia or the low of the day at that point. And so again, it's not going to be, this initial trade is not going to be something you're not going to be a billionaire or a millionaire trying to hit this in one day, but you're going to learn over time what it takes, um, to get this entry repeatedly, right? And so being able to scale as a trader is really just being able to be comfortable with taking a particular trade over and over and over again. And so this is the first kind of piece when it comes to actually entering the market. We'll kind of stack this on top of biases and on top of other things. But again, the first thing you want to see is a run on liquidity, right? On that 15-minute time frame, right? So it doesn't matter if it's Euro USD, GBP USD, Euro futures, whatever currency pair you're trading, you want to see a run on liquidity in our time windows, right? So this could be Asian session. Most of the time, this initial trade will happen in London session, right? The market will start to reverse in London, and then it'll continue in New York. And we'll talk about New York continuations next week. Actually, we'll talk about New York continuations next week. So again, the first thing I want to see is a run on liquidity on that 15-minute time frame. Then I want to hop down to that 5 or 3-minute time frame. And again, the smaller time frame, the tighter the entry. So ideally the 3-minute, but sometimes the 3-minute moves too fast to people. Again, when you're first starting out, your job should really just be to capture a part of the move, and get used to seeing everything play out. So ideally what I want to see is on that 5 or 3-minute time frame, I want to see a break in market structure. You might hear some people refer to it as a market structure shift. But I want to see the market really reverse off of this high. And that's basically signaling to us that we got what we needed and we can start moving in the chosen direction for the day. In this case, the old low, right? The next thing we want to see is a formation of that fair value gap. That fair value gap, in a best case scenario, the fair value gap will be under the high that was just taken, like this. It doesn't always play out like that, but that's a best case scenario. Then we'll see, once we see that formation of a fair value gap, we want to see the market run into that high or that old gap, right? Sometimes it'll be a very quick reaction. Like if you watch some of these fair value gaps that I just pointed out, it was a very quick reaction. It was spending like 3 maybe like 369 minutes in there, and then it rejected. Then it came back up in here, and it was less than 3 minutes in this gap, and then it kept going down, right? And so sometimes it'll be a very quick reaction. Sometimes it'll be a very long reaction. Like price will dance in here for a while before it finally gives up the ghost. You have to really just know, be prepared for, either or. It could be very quick, or it could be take its time in here, right? And so a lot of times people get scared in this chop back and forth, because it's one thing to see this in retrospect, but it's another thing to see it when the price is actually happening. And so a lot of times people might get scared in this chop, right? We talked about here. This is basically what you're sitting and waiting for the entire time, waiting for this to kind of go in your chosen direction. And this can scare a lot of people. So it's one of those things where you need chart time to be able to sit through that and weather that. Again, stop loss will go over the fair value gap formation, or the candle that forms the imbalance that forms the fair value gap. So that this black candle, stop loss will go over this high. And then, you want to wait for price to, again, re-enter that gap and then fall over. Oops. Re-enter this fair value gap and then start to go in your chosen direction. We'll, in the future lessons, I think the next week what we'll do is we'll talk more about how to manage that trade. So that example that I just showed you guys where the price is running towards the target. It's one thing to be able to pick out an entry. It's a totally different thing to be able to manage your trade and have the confidence that it's going to get to where you think it's going to get to on the chart. And so we'll talk about that. We'll talk about biases. We'll have a lot of examples next week. But again, I wanted to be able to kind of drill this into you guys for this week. So your homework for this week will be going to a bunch of different currency pairs, right? It could be AUD USD, it could be Euro, it could be GBP USD. Map out the same thing you've been doing: Asian session, London session, New York session. In that London and New York session, in our time windows of 2 to 5 for London, or 9 to or 7 to 10 on the New York session, I want you guys to be able to see this happen. I want you guys to be able to see the breaking or the running of liquidity that happens from somewhere between 2 to 5 a.m. In this case, it was a little late. It was about 6, but the majority of the time it'll happen, in that range. Then you want to see the market break structure and then give up the ghost and fall over, right? After re-entering that fair value gap. And note where your entries would be, where your stop loss would be, and then where some of your take profit levels would be. Again, all of these sell side liquidity levels could act as partial take profits. Like I could get rid of some of my position here, some of my position here, some of my position here. And because the logic behind this is that we grab the buyers and now we're trying to distribute to the sellers, right? We kicked in all these buyers, and now that these buyers are broken structure and it's going down, the trade is technically going against them. So they're going to want to get out of their trade. Well, where are they going to want to get out? When price takes out an old low here, here, or here, right? And so we're going to want to sell our buying position to the sellers down here who want to get into the game. They're going to want to sell in. We're going to want to sell out. So that at that point, these buyers are going to want to sell out of the game. So you want to distribute this liquidity to the people here, here, and here. And so that's all it is. Once you start thinking of the market as this game where you're distributing between buyers and sellers on a daily basis, it gets very, very boring and very, very clear. I think, a lot, once you stop looking at the market as this thing that is like, I'm trying to win my trade, and just start to look at the order flow and start to see where your buyers are at and where your sellers are at. And you're going to start to see the market move to those levels very repeatedly with a lot of precision in our time elements, right? So time and price theory. So I'm going to pause this here. I'm going to stay on for any questions. I know it looks like it's just one person on today, which is cool. I know more people watch this on the replay. But again, run on liquidity in the 15-minute chart, hopping down to that 5-minute or 3-minute time frame. See the break in market structure. You want to see the formation of a fair value gap. Then you want to see the price re-enter that gap. And then that's when you're good to enter. And the last point here is you want to target the old Asian session low. Or if you want to get out, at any of the sell side lows here because we know there's going to be liquidity there. But ideally, I would love to see you guys hold to the end of the Asian session, really to kind of build that confidence level up. And while this happens, whether it's happening live, whether you're looking at live examples or you're watching, going back in your charts and doing old data, then I want you to be able to kind of take a note and see what happens, the times this works, the times this fails, what happens when it wins, what happens when it fails, that type of thing. So you can get more comfortable with being able to see the charts through this lens. So hopefully that makes a lot of sense. And if it doesn't, let me know and we'll go from there. So that's all I have for you guys today. Hopefully you enjoy it. And then we'll start to basically build on this over the next few weeks. This is where the charts get fun, but I need you guys to get a few weeks of kind of like prep work in, and every week should be building on each other. So if you have questions, let me know. But again, this will be the idea of a winning trade. I didn't take this trade because this was the day before the election, but I ended up taking a trade very similar on Friday um, for a $2,500 win. So hopefully, um, when you get to that point, um, you can get a little bit more confident. But just to show you again, I'll close the session with this. Oh dang, I did not close that out. That's not good. I'll show you this that this is a demo account that I built over the past few weeks. So the first trade was taken, this account was open on April 25th, right? And I took 3 trades. They really didn't do anything. It was like a couple $100 here and there. And the next trade after that day was September 16th. So on September 16th, this balance of this account was $50,000. Again, paper account, paper money, not real money. But using these principles, I was able to take this account to $295,000 in about a month, about 2 months, right? Finding good setups and really kind of pushing the lever. And again, I tell everybody this because obviously the accounts that I trade are real. You can see them when I post the results. They're going to be from AMP Futures, right? It'll have the AMP Futures logo in the chat, like in the actual screenshot, so you'll be able to see that. But I do keep these accounts on the side where I'm a lot more aggressive. I have a lot more fun with them because they're really just to kind of let the steam off. And so, again, not saying that this is something that you'll be able to do ever really on a personal account or a real account, but just showing you again the potential of when you understand these concepts to the full and the things that I'm teaching you guys over the course of this mentorship, right? So, again, I'm 10 times more aggressive here right now because I'm kind of at the point in my life where I can't afford to lose $50,000. But again, if I was a little bit more aggressive with my personal stuff, this is kind of, again, things that I'd be able to do. So, um, same concepts here, obviously bigger wins, bigger trades, but the same concept here is what I primarily use to build the other account that I'm not going to pull up because it'll have my numbers on there, but the main account that you've watched grow from $10,000 to 30, it's sitting at I think about $38,000 right now. Um, and that was since August. So like August 1st, I think, or August, like the first week in August. So again, this stuff works. And again, I'm not saying again, the disclaimer is this is not financial advice, it's not investment advice. This is just me telling my strategy that you hopefully will take and use on a demo account because I can't tell you legally to go live, right? I'm not a financial advisor. I can't give you investment advice. So, but I can teach you how to read price, right? And it's up to you to kind of do what you want with that. So again, this is basically again the strategy Again, guys, sorry about the interruption, but yeah, hopefully that makes sense. If you guys have any questions, feel free to hit me in the chat, and we'll go from there. Thanks. Peace.